Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in as consumer prices and as consumer debt explodes, so does fraud explode with it. Specifically, what we're going to talk about today is mortgage fraud, and we're going to look at the different types of mortgage fraud that's skyrocketing. None other than a wire transfer fraud. The schemes right now for wire transfer fraud are shocking. So we'll look at wire transfer fraud, we'll look at additional areas of fraud, and then we're going to take a look at the top cities that are spiking in mortgage fraud overall. And we'll end the video taking a look at an article that's reporting on Ontario and how they're making additional lending restrictions and tightening credit based on mortgage fraud. Now, you guys know that I've been preaching about tighter lending restrictions. We need tighter lending restrictions right now if we're going to continue to curb demand to purchase houses. And guess what? Over the last 3 weeks, we have seen tighter lending restrictions and an inability to get some loans that we were able to get approved 3 months ago. We can no longer get those same people approved today. So lending restrictions are coming now, whether it's a result of the bank runs or mortgage fraud, at least they're coming. Now, the name of the article that we're going to review today is titled, "As the Housing Market Remains Tight, Experts Say Real Estate Fraud Has Spiked in the U.S." There's a few bullet points right here. Real estate professionals say they've seen a surge in housing fraud over the past year. And that's probably a result of desperation, right? And greed. Second bullet point. It's a consequence of tight conditions sparking desperation from both buyers and sellers. Bullet point number 3. Some experts say they expect the situation to get worse as market dynamics continue to shift. So instead of people waiting like I'm waiting, instead of that, they're trying to take shortcuts and commit mortgage fraud. Big mistake, right? Generally, rules exist to protect people or to make the greedy rich, right? But the premise is it's generally designed to protect people. I'm just saying, let's continue. Again, this is going to mainly go into wire fraud, so I won't read all of this. When fraud victims contact Mark Berman, an attorney at Ganffer Shore that frequently deals with cases of real estate fraud, they're often distraught. Many of them were close to closing on a property when they received a legitimate-looking email or text asking them to wire a chunk of money to wrap up the deal. And this happens all the time, you guys. I'll go into this a little bit more. Let's continue. It becomes clear later that the request was sent by a fraudster, part of a wave of similar scams looking to take advantage of frustrated home buyers and sellers clamoring to transact in a tough market. So again, when people get emotional, they just really lose their logic. Berman and other industry professionals told Insider that real estate fraud has surged, a trend that's being driven by tight markets with high interest rates and slow transaction volume. Home buyers, sellers, and brokers are often trying to close deals as fast as possible. And there lies the problem. Why are they trying to close these deals so fast when it's first-time home buyers that don't know hardly anything, right? Biggest financial transaction of their lives, and everyone's trying to speed up the closing, right? One of the major problems in our industry, you guys, I can't tell you how much that upsets me. Let's move on. Analytic firm CoreLogic found that the risk for property fraud in which a seller misrepresents information about a house on the market increased 23% in the second quarter of 2022 from the prior year. That means that the sellers are lying about the condition of their properties to just sell it to someone, right? Pretty messed up, wouldn't you say? And again, if those people are, waiving their home inspections, these things are going to happen. They're going to walk into a piece of trash probably. Wire fraud, when a fraudster siphons money from the buyer at some point in the transaction. Now, this is huge. Okay, so the wire fraud on the buyer side is huge, and I'll go into that a little bit more. And title fraud, in which a scammer transfers the title of a property to a third party, have spiked. Transactions where wire and title fraud were a risk factor noticed an all-time high in the fourth quarter of 2022. Okay? So we have an all-time high of fraud going on right now. So Again, I'm saying, do you just really want to rush out and buy a house right now? We got fraud going on. We got cheerleaders. We got reckless enthusiasm, blind optimism. Is now really the time to buy? Now, unfortunately, man, I wish it was time to buy right now so I could stop renting. But all-time high Q4 2022 wire fraud. Why is this happening? The spike in fraud comes at a time of shifting dynamics in the US housing market. And obviously dynamics are shifting greatly and people don't like it and people are getting blindsided for some reason. Rates on the 30-year fixed rate mortgage soared from pandemic lows to touch 7% in 2022 and have hovered near that level since. Meanwhile, home sales, housing starts, and new home listings have all cratered, leading some experts over the last year to warn of a housing market that could bring on a steep correction in home prices. And I'm one of those people. But while some prospective buyers have been sidelined, good job, you guys, those who are in the market are increasingly desperate to close, experts said, leading to a rise in questionable deal making. Okay. So again, this is what I've been saying. I think the people that went into the market right now are desperate, strong buyers, because here's the reality of the situation. You have to be rich to buy a home right now. You have to be rich to buy a home right now for the most part. And that's just is not going to work for very long. And I can promise you that. Let me break down a little bit more about wire fraud. Here's what happens. So if you're a buyer and you're about a week away from closing, part of the normal steps of the transaction is to wire your money to the title company. Okay. Now, if you're going to wire money to the title company, which is normal, what you need to do, what's recommended to be done is you call the title company directly and you say, what is your wiring instructions, right? You don't get an email, you call them directly, because what these fraudsters are doing is they're sending these buyers emails that look exactly like the title company, but one digit missing in the email. So they'll have almost the exact same email and they'll have one letter different. So you really can't tell it's a different email, but there's one letter different in that email. And they're saying, congratulations, you're ready to close. Wire your money to these wiring instructions. So the buyers are like, yeah, let's, I just want to be done with this. I just want to be done with this. Let me wire the money. So they take that email, they go to their bank and they wire it to someone that just takes their money and runs with it. And generally, there's nothing they can do about it. So really, really crazy. And my question is how do these scammers know where they're at in the transaction, and how do they know what title company they're using? How do they know the email addresses of those title companies? The sophistication right now in fraud is shocking. These fraudsters, y'all, are making so much money. And again, the shocking thing to me is you can't do anything about it half the time. To wire money, you need to call the title company directly to get the wiring instruction. It is what it is. And now what I want to do is I want to go into CoreLogic's Q4 of 2022 mortgage fraud report. Obviously, they're going to be releasing Q1 of 2023 soon. They have not released it yet, but take a look at where we're at in Q4 of 2022. This will be linked in my description. This is CoreLogic, as I said. Now, this is going to go into a few different types of mortgage fraud, because obviously it's not just wire fraud. There's consumer fraud as well. But here's our mortgage fraud brief. This is Quarterly Mortgage Fraud Insights. The CoreLogic National Mortgage Application Fraud Index for Q4 of 2022 is 127, and that is up 3.6% from the prior quarter. The year-over-year trend is down 7% from Q4 of 2022 when the index stood at 137. Overall, application volumes continued their decline in Q4. Purchase shares remain high at 74% of transaction. As was the case last quarter, government-backed purchase share increased from 15% to 17% of applications. We analyzed our most predictive alerts that had moderate increases from September to December and see trends to identify income, transaction, and occupancy risk areas. The first level of fraud is identity fraud. More applications with limited or inconsistent borrower consumer data history. So it could be someone that is not even part of the transaction, is not even a real person. Now, the second area of fraud is income fraud. Increase in incomes that appear inflated compared to property value and signs of income fitting. Okay, so income fraud, and that's really, really hard to do because there's so many verifications in place for today's lending because of the Dodd-Frank Wall Street Reform and Consumer Protection Act. Occupancy fraud is one of the biggest consumer frauds in the market. Occupancy, increased reverse occupancy alerts, including possible use of false projected rental income. So not only like whether or not it's going to be a primary residence, but also they're probably signing dummy rental agreements that aren't even real rental agreements. Now, transaction fraud, highest levels of distressed properties and transactions with multiple high risk elements. Okay, so that's a little bit of a breakdown right there. One alert that increased significantly was the alert for repeat applications from the same borrower. So that's showing us that lending is tightening up, right? It's tightening up. If someone can't get approved, they usually go to a different lender. So it can show multiple things. For the same borrower, property, and lender, the alert firing rate was up 20%. We encourage our lenders to reference the prior loan application when the alert fires to ensure any changes to qualifying information between the two applications as well supported. So that's saying that someone gets denied, figured out why they got denied, and then they change that information. But take a look at this. Here's the top metro areas with fraud right now. So the number one area is Miami, Fort Lauderdale, and Pompano Beach, Florida. Number one fraud. That's crazy, y'all. And that is up 1%, as you can see, quarter over quarter. Number two is New York, Middleton, New York. Number three is New Haven. Then we have Stockton, New York, Jersey City, New Orleans, Los Angeles, Houston. Houston's on here. My own city's on here. But look at Houston is the only place that's going down in fraud. Look at negative 1%. You guys can see this. Look. That's what's up, Houston. Do better, Houston. Do better. We're watching, but geez, to be on this list is really bad. So Houston, Sugarland, and the Woodlands, followed by Province, and then McAllen, Texas, San Francisco, California, Springfield, and then Riverside, San Bernardino, Ontario. I just got back from Riverside, San Bernardino, and then the last is Chicago. And if we look here, that's pretty much all going up across the board. Except again in Houston, because we're trying to do things better in Houston. But regardless, we can see fraud is absolutely skyrocketing across the board. And that's bad for so many reasons. Another one of those reasons is more pressure on the banks, right? More defaults, cancellation of loans, them having to liquidate assets, hopefully, right? Which is what we want. But it is what it is. Now what I want to do is let's take a look at what's happening around the world as far as curbing mortgage fraud and additional lending restrictions. Look no further than Ontario. I have a Yahoo Finance article. It will be referenced in my description, as it is always, deterring fraud in Ontario's mortgage broker sector. This was released March 28th. Toronto, okay? The Financial Service Regulatory Authority of Ontario is holding additional consultations on guidance that describes requirements for FSRA licensed mortgage brokers, agents, brokerages, and administrators to deter deceptive and fraudulent practices in the mortgage broker sector. During these times of high inflation and rising interest rates, we need to do everything we can to protect individuals and families from becoming victims of fraud. I would agree with that. With the valuable input of our stakeholders, we have strengthened our proposed guidance on detecting and preventing mortgage fraud, and we look forward to hearing more from the public on this important initiative. So this is good. They're trying to take initiative to stop the mortgage fraud. Why wouldn't that be a good thing? As a result of the feedback received from stakeholders during December 2021 public consultation, FSRA is proposing changes to the proposed guidance. These changes include additional content on addressing the duty to verify documents and identities. That should already be done. In my opinion, it is done. I am in residential mortgage lending, and I could tell you they nitpick all of that stuff. So they should be doing really a lot of verification on identity and especially income documentation. So so that's good. Now, the second thing, ensuring appropriate anti-fraud policies, procedures, and training are in place and updated regularly. I think the training is especially important. Clarifying the role of principal brokers and brokerages and principal representations and administrations in providing and detecting fraud. So when all is said and done, they're trying. And what we have to understand is these fraudsters are probably making more progress than what they're doing to eliminate the fraud. Think about that. Fraudsters making more progress, government trying to catch up. What all of this means is this: you have to do your own due diligence. No one is going to care about your investment as much as you care about your investment. So all of this reckless optimism, this blind purchasing, the emotions being thrown up into the purchasing process needs to stop. The more emotional you are, the biggest at risk you are of being taken advantage of. So in conclusion, what I'm saying is due diligence should be king. You know how cash is king, right? Cash is king. Due diligence is king, okay? Remember, you're not buying an iPad on Amazon. You're buying a humongous thing like a house, and that's why there's so much fraud. Everyone wants a piece of that money. Everyone wants a piece of that profit. Everyone wants to take advantage of you, okay? Think about that. Plan for the worst, hope for the best, trust, but verify. Y'all see what I'm saying? And I hope you guys can do that by listening to my video. I hope it empowers you to protect yourself. Now, other than that, you guys, I really hope you guys enjoyed this video and you guys got some new insights, value, and perspective. And if you're out there investing in real estate, you know I wish you luck and I hope you win.